another episode of Blockchain Disruptors. I am welcoming Greg Johnson today. So he's spent over 2 years, over 2 decades, I should say, as a CEO and senior executive in Fortune 500 companies and startups, spanning everything from financial services, insurance, and digital assets. He is a respected thought leader and co-founder of Rubicon Digital Assets. He's shaping the future of blockchain, Web3, and digital currencies while mentoring fintech innovators and influencing policies globally. So, welcome, Greg, and thank you so much for joining us.
It's a pleasure to be with you, Ginnette, and thank you for the kind introduction. Hopefully, I can live up.
Yes, I've no doubt that you will. So diving straight into it, it's been a
Yeah.
really big year for the industry. How do you see the landscape evolving for digital assets in the United States, particularly with the new administration?
It's to say that it's been an interesting year would be the understatement of the decade. I think anybody who was even remotely optimistic about a Republican administration coming into the United States in the seat of power would have to be honest. They didn't see this much momentum generated this quickly. We're not even at the time of taping this discussion at the inauguration yet, and already there have been seismic changes throughout the ecosystem, from the regulatory front, certainly from the venture and investing front. I knew there was going to be a big shift, but I will be honest and say that I didn't even expect things to move as quickly as they have been. I think the hard work for those that are still have a crypto and blockchain sugar plum fairies dancing in their heads about 2025. There's hard work to be done from a U.S. perspective. In fact, I would caution many ventures, people that might be listening that are looking to grow their businesses and understand the regulatory landscape, that even with a very, very pro-crypto, pro-Web3, pro-blockchain administration, the wheels of large bureaucracies still move slower than what we would like. I'm incredibly optimistic, but I'm also very cautious about how fast things might move in Washington.
Yeah, and so you bring up a really good point when you spoke about how fast the change has come. So and I think the word you used was seismic shifts. How sustainable do you think that is in the long run?
This is what I'm most excited about. Thank you for the follow-up, because I think what I'm most excited about is what is changing now is irrevocable. Not the policy, not a piece of legislation per se, not somebody in role, in title, in new. Most people who are watching this know that the U.S. has announced there'll be the appointment of a new AI and crypto czar. We should come back to that, because I think the fact that we've merged AI and crypto together is very wise, quite frankly. But I do think this bull run that we've seen coinciding with this Trump election victory, the cumulative effect of that is forcing all companies, not just financial service related companies or payment companies or banks, but all companies with treasury function are now having to come to grips with the fact that they can't be cynical about the industry any longer, that they actually have to lean in. And when you couple that with some of the early victories for the industry in 2024, again, speaking here in the United States,
Yeah.
The approval by the SEC for spot ETFs for Bitcoin and then Ethereum. These were some of the first big movements, albeit in a Democratic administration. It may have been too little too late for some, including me. But the reality is that momentum was started a year ago right now to this conversation. And we've seen it sustained throughout 2024, but certainly has gone exponential since the election results here in the U.S. So I don't see us going backwards, regardless of what happens in a midterm election or perhaps another change of political party at the presidency in 4 years. The reality is this is not changing, and this time, with all of the things that are taking place, what I believe we're going to start seeing is one by one, every company that has a treasury function that actually makes money, exchanges money, is going to have to now rethink how they're thinking about payments, how they're thinking about notions of Web3 and privacy, and all of the things that many of the folks that might be tuning in are already quite familiar with, indeed fluent with. more people are going to get pulled in. And with that, the Metcalfe law levels of adoption that we've been looking for from this industry, I think start to happen with increasing speed.
Yeah. Um, so it's interesting because as you were saying that from I think about how it plays in on the talent side, and because you've suddenly got the pool of players has dramatically increased. To your point around it's no longer just this small cohort of industry players that's having to consider this, but a much wider breadth of organizations. There is only but so many people actually that have true subject matter expertise in this, and so I really am seeing already this massive talent crunch as well,
Mm.
where there has been so much activity that's focused globally, and now people are really trying to hone it in on who can provide this expertise within the US.
Well, the good news is I think it means for folks like you that have the kind of specialty and subject matter expertise that you've acquired, you may be the lifeline to actually sort out all of the imposters from the folks that have actually put their due diligence in. I can tell you that people have been coming out of the woodwork all of a sudden interested again in kind of the advisory work and consulting work that I've been doing while I've been on a kind of a gardening year this
Yeah.
past year. It's been incredible how many people I haven't heard of in years all of a sudden are now interested in things. And so I think it's going to be incumbent upon the HR function and certainly the search profession to be able to go deep and to be able to ask the right questions. That's no different, though, than what we're seeing with AI. Everybody's AI. And I teach emerging tech at NYU. And it's amazing to me if you go to most boards that have already invested and allocated billion-dollar capex expenses on AI. If you go into that room and you actually made them write down what does the GPT in Chat GPT stand for, they can't do it. And so the level of the level of understanding of these emerging technologies, including digital assets, computational intelligence, or AI, is at best in the shallow end of the pool.
Mm,
And so the good news is somebody like you that's been dedicated to the space for a while now, you'll be able to sort these folks out very, very quickly.
yeah.
The other thing that's changed, though, to the spirit of your question, is that it's okay if you don't have 7-8 years of blockchain experience. Very few people do. The I think the difference is going to be for the search profession is, are those candidates asking the right questions?
Hmm. Yeah.
Okay. Because you're right, there is not going to be enough around. But as with any executive role, I've had the privilege of leading very large enterprises. I've had the privilege of leading small startups and advising many of them. At the end of the day, regardless of the scale of the operation, you have to be able to ask the right questions. And
Hmm.
today, more so than ever, things are happening. Sorry to borrow from the movie, but everywhere, everything, everywhere, all at once, right?
Yeah.
And 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 frankly, you can't have a digital asset strategy without it being integrated with your overall data strategy, which within your overall data strategy is an AI strategy.
Hmm.
And these are not stark and unambiguously different verticals, as the legal frameworks used to say about platforms and verticals in large companies. They're all being shrink wrapped or shrunk together in a way that we've never seen before. And so, what I think people need to look for in candidates, whether they're at the entry level or not, is do they have this kind of aggressive curiosity?
Yeah.
Do they have an understanding of how what's going on in the Middle East with respect to CBDC proliferation and pilots has to do with actual crypto and digital assets? What that has to do with the stability of the US Treasury market? What might stable coins be doing to your venture, whether large or small, whether it's a founder size venture or whether or not it's a massive, massive company?
So, so we've talked a lot about the regulatory impact in the US. How do you see global crypto regulations evolving, and particularly in light of what's happening in the US?
What a great question, Jeanette. And I think the timing of the question is really important. I think for the first time, maybe in about 5 or 6 years, we're actually going to see a slowing down, if you will, of regulatory innovation outside the US to wait and see what comes out of the first 2 quarters of 2025 in a Trump administration with all of the promises, all of the expectations, before I think some of the other larger regulatory bodies get back to what they want to do that they feel is in their best interest. So I think you're going to see a very understandable, predictable slowing down of innovation projects, et cetera. I don't think it would be any exaggeration to say that the US's importance, at least today, in overall capital markets and banking and finance and you name it, in payments, is still a dominant player. And so what I just said, it's not a kind of a just an original thought. I mean, it's pretty common sense. However, what I'm curious to see is whether or not this new generation of regulatory leadership in the United States will borrow from some of the terrific thought leadership that we've seen in many jurisdictions. Whether or not it's from the EU, and we're starting to see MiCA now this year really come to full fruition, whether or not we'll incorporate some of the attributes of the MiCA framework. Will we even skim something from some of the fledgling regulatory bodies in the UAE like VARA? Will that find its way some way, shape, or form? Or will the ADGM model, which I believe from a digital assets perspective in Abu Dhabi is absolutely one of the most important regulatory kind of developments we've seen over the last decade. And that's a 10-year project now. I mean, originally conceived or the idea behind what became ADGM in Abu Dhabi is now 10 years old and coming to life in 2018. But all the work behind the scenes was taking place going back as far as 2015. So I think from a regulatory perspective, we still have to see and pay close attention to what innovation is taking place in Singapore, in with the Hong Kong Monetary Authority. Obviously, China has a lot to say about what might happen with digital crypto, and I don't think any regulatory regime is going to have the luxury moving forward of the way things used to operate. You know, Ginnette, you and I grew up in an industry where once a decade there was a major collapse, a major scandal, a market crash, and it ushered in new sweeping regulation. And I think we're about to enter a new world where it's more of a endless summer, to borrow from the classic surfing movie, an endless summer of regulation, where there is a continuum of evolution over the next several decades that
Yeah.
could be every single year you're going to see additional codification, additional statutory updates, and I don't see how we can prepare for anything other than that, given the speed at which digital assets combined with emerging technologies like AI and like quantum are going to have on this ecosystem. As I said before, everything is being shrunk together, shrink wrap, right? More than we've ever seen when it comes to the exchange of value and the investment space.
Yeah, so you've teed that up really nicely in terms of then moving it into this conversation around this merger, if you like, of blockchain and AI and being seen as very sort of symbiotic in a lot of ways. What's your thoughts on that? Where do you think it's going?
I think one of the biggest disappointments in the industry, meaning the digital assets, the blockchain industry, the crypto industry, I think probably the biggest disappointment, if we're really being honest, if we look into a mirror of accountability as an industry, we haven't delivered on the tech. The promise of the tech has not lived up to the hype yet. And I think where that intersection that we were just speaking to really comes to play, and this is where leaders throughout an organization have to be fluent, is they have to be thinking about what, in order for smart contracts to be really smart, it is going to require agentic systems, AI agents for the uninformed, to actually have a huge role in the future of smart contracts. And so I'm optimistic that that can be done. But the consequences of getting it wrong when you have agents doing everything is something that we need to take very seriously. I hope the industry has learned from some of the mistakes. While we can have academic debates about how much of crypto as it stands today is actually, as the SEC in the United States would describe, as securities. I believe many of the crypto projects, they're securities. But whether that's the case or not, I think we as an industry need to recognize that if we have the best possible regulatory regimes, the most favorable that we could possibly imagine, and we still allow the charlatans and the thievery and the pig butchering to dominate the headlines, the industry will not live to its full promise. And I am hopeful that we use this, at least in the United States, but I think it will carry out more broadly, that we use this window of opportunity to really not, as the shampoo instructions say, wash, rinse, and repeat. Okay? We don't need to continue to shoot ourselves in the foot, and we should be more, I think, acknowledging of the legitimate concerns that regulators would have about an industry that it's in its infancy and continues to allow charlatans to dominate the headlines. So, for example, we have Do Kwon being extradited back to the United States. For those of you not familiar, Do Kwon was the founder of the Terra Luna algorithmic stablecoin that collapsed. It wasn't the only reason, but it certainly did not help with the crypto winter. And he has been extradited. Now, that's going to bring very poorly timed headlines in Washington if you're Circle or you're Tether, especially if you're Circle and you're trying to do something right as a stablecoin provider. You're not going to be happy about the fact that most of the consumers out there will not be able to distinguish between an algorithmic stablecoin that failed and Circle being depegged for one day because a bank had trouble with some of its cash reserves during the Silicon Valley Bank crisis. So the reputational risk that we face is important for any business leader in digital assets. And as a matter of fact, I think personally, the way that I look at leading these businesses is that regulation is and compliance is biz dev. And I think that's the most important thing. Anybody that is running a crypto business, large or small, you need to reframe how you think about compliance and regulation, because if you do them well and you do them offensively, that is business development. It's not going to stunt your growth, it's going to accelerate it.
Yeah, and a lot of what you just described there is still sort of that age-old issue of the industry itself has still got a PR issue, no matter no matter all the positive headlines. It's surprising when you get outside of your bubble of people in the industry who can understand what's going on, the cynicism that you encounter when you're at the party and somebody asks you what you do for a living and you describe your the industry, it kind of gives you a quick window and a quick reality check of like my reality and sort of complete view is not the snapshot that your everyday person, for example, and in some instances, the everyday person in in totality can is make or break, right, around whether there's actually like a mainstream sort of use case for some of these things. So what do you think the industry should be doing collectively to handle that PR issue, which won't be solved in a day?
It won't be, but I'm very optimistic that we can move forward. But I do think it means more education more than anything else. Until the educate, let me give you a great example. When I say regulatory goulash in the United States, one of the most respected centers for advancing regulatory education, alternative asset education, has been the University of Cambridge Alternative Asset Center in England. And over the past 5 years, they've done 5 cohorts in their global regulatory curriculum, educating global regulators on the basics. It's a robust curriculum. It's very intense. It's brilliantly orchestrated by some of the brightest, noble minds in finance, banking, and the industry, meaning the crypto and digital asset industry. There have been over 400 attendees in those cohorts from 105 different jurisdictions. How many of them from the United States attended? And the answer is 1. Okay, so the level of education here in the United States, at least, for the people that are going to be doing the regulating and sitting in on those meetings, it doesn't mean that they couldn't acquire it. To be clear, there are other places you can go. You can go to Wharton, which had a program. There's one at MIT. There's lots of places. But when you look at one of the premier educational institutions with a early program for regulators, and you only see one regulator, it shows you just how much indifference there has been. And as I said before, we do not have the luxury in this industry of not paying attention to the different parts of the ecosystem. So the education also is at the policy level with our elected officials. If we were to go, you and I, if you were to fly in from Chicago, I'll fly up from Atlanta where I am today, and we go to the inauguration and we interview all the congressional leaders that are there, and we ask them one question, Ginnette. Senator, Congressperson, please tell me, what are your thoughts on proliferation of CBDCs here in the United States? The response we're likely to get is largely, well, I'm in favor of it for medicinal purposes, but not for recreational reasons. Most of our politicians here in the United States think it's a CBDC derivative. If we get somebody that understands it, their understanding is wildly at the extreme. Whereas if we go to Parliament today, and if we were to go to London, and we were going to sit in an evidentiary hearing or an APPG, the breadth and depth, I must say, is deeper and wider in the UK, deeper and wider in Europe, in Brussels, deeper and wider in all of the other major jurisdictions than what we have in the United States. So to answer your question, it's education at the regulatory level, it's education at the policy level. The good news is that I do believe that these, just like Treasury Department heads, are going to have to pay attention to the industry more and learn. Politicians now are faced that this is a real voting bloc with significant and growing influence, and maybe we better actually attend those briefings that go on the Hill. And that's my optimism is there's motivation to do it, and education is the key.
Mm-hmm. Yeah, and actually motivation drives the necessity for people to get educated. Is it switching a little bit to real world assets,
Okay.
tokenization? I know that this is an area that you're heavily involved with, and I'd be interested to get your take on some of the most promising use cases that are emerging around tokenizing real world assets.
Well, I think one of the first that comes to mind is when we think about tokenization, I would say thus far we'd have to say that the stablecoin industry has found a way to bring tokenization to the mainstream more than anything else. That's number one. I think, and by the way, my views come as the chair of the tokenization working group for the Bretton Woods Committee here in Washington, D.C., but I would say the other area that we're seeing significant interest is in tokenization when it comes to real world assets. Real estate continues to be both commercial, residential, and land property. The most interesting and relevant use cases for tokenization is coming in that direction. We're not far away, though, from tokenization of more traditional insurance products. Many people in the investment community are familiar with REITs, real estate investment trusts. They are almost the perfect existing asset class to be tokenized, meaning taking a traditional asset and representing that asset in the digital world through a tokenized wrapper which allows for accelerated and ease of trading or fractionalizing, hyper fractionalizing those assets. I think those will be the first areas that we look to see. And then I think you're going to see all manner of derivative and hybrid products that emerge over the course of the remainder of this decade and into the next decade. There's no question about it. Tokenization will also carry forward in real life application with digital identity, Ginnette. I think there's a foregone conclusion. That's a heavy lift, though, to figure out who do we trust, who does it, what are the safeguards. There's so many, again, nefarious projects out there that are just, again, not helpful. But these are some of the likely places that we're seeing. And again, some of the early both blockchain and tokenization efforts that we've seen have been in the repo market. The aftermarket short-term duration trading that many people may not be familiar with, but this is a huge part of the global financial infrastructure that takes place without us even thinking about it. And to anybody who's cynical about the importance of tokenization, one of the most important and quietest company on the face of the financial world is DFCC. Okay, the DTCC, excuse me, the Depository Trust Clearing Corporation, essentially is responsible for all of the clearing and settlement for every single transaction here in the United States that comes from abroad or internally. It is a massive, massive deal. And we don't even think about it because it's embedded in the plumbing of the global financial system. And yet, even though they were going through a massive, massive roadmap to move their settlement cycle from T+2 to T+1, at the same time, they still thought it important enough to acquire a tokenization company to add to their portfolio. So again, I know that may have sounded like hyperbole, but if you look at them, if you look at DTCC, you're like, I can't believe I never heard of these people. And they basically are handling and touching almost 90% of global transactions. And they are investing in tokenization as we speak.
Mm-hmm. Yeah, which is obviously very. Those are all sort of significant signals, and there's I think and many more like that. When you talked at the beginning about use cases,
Yeah.
and you talked about real estate, for example, where do you think we will be in 12 months time, right? Because there's a lot of times where there's some great things from a conceptual level, but in terms of the execution and these things being kind of embedded and the use cases commercialized in a very meaningful way are two very different things.
Yeah.
So we know long-term horizon, but what can we expect even in a short, when we look at a shorter term horizon, 12 months, 24 months, where will these things potentially get to?
What a great question. I'll go backwards before I go forward. And I think for many people that have not really been paying attention to tokenization, may have undervalued or not even been aware of one of the significant announcements from 2024, which was the collaboration between BlackRock and Securitize to basically create a tokenized money market fund for just to keep it simple. Okay. It's symbolic because you have the largest asset manager in the world in BlackRock moving, again, for an institutional money market fund, but nonetheless investing heavily in that direction. Now, they join Franklin Templeton and several others in moving in that direction. So quietly, the big institutional players are setting a foundation for tokenization. So I think you're going to see a succession of highlights, not just here in the United States, but firms like SocGen and their digital assets subsidiary. They're working in that direction heavily. I think you've already seen a lot with Standard Charter and many of the things that are taking place. I also expect big things to come from Singapore and Hong Kong on tokenization. And we talked about the Middle East a little bit. There is more work going on. And I'll just say this about the Middle East. There are many people that have downplayed the Middle East because of the hype and the glitz and the glamour that often accompanies the story of what's taking place in the GCC, the Gulf Cooperation Council states, the oil-rich states. And yet behind that, I'm not saying that they will, but I'm saying they have perhaps the biggest opportunity to play an outsized role in the future of financial services, banking, and tech because of all of these investments that they're making. And I think it's also because there aren't as many legacy systems to unwind that they have a chance to leapfrog, in many respects, other jurisdictions that get a lot more attention. In the new world, I'm not sure if you would agree with me, but I think you might, that it is ironic that when we think back and look at our history, we think about the ancient trading routes, the Silk Road, the Spice Roads. And I believe what we're seeing right now is a new digital Silk Road being constructed, where data is one of those commodities being traded and transferred from east to west and vice versa. And logically, the Middle East would play a geographic role in that, but they've put the money into developing their tech and financial ecosystems over the past decade. I'm beyond impressed. I think what the Saudis are trying to do right now, if they pull it off with Vision 2030 or get close to it, it's easily the most successful civil and financial transformation ever done, period. What the Emiratis have already accomplished probably gets that moniker, and they're not resting. So it's very exciting beyond all of the glitz, all of the glamour. Real work has been taking place there. That doesn't mean it's ordained to be successful. It means that they have an outsized opportunity to consolidate all these efforts and actually really become a leadership hub for digital assets and for tokenization, especially tokenization because of the proximity of tokenization for gaming and some of the other ecosystems that many of the folks that are fluent in digital assets know that there's a great amount of overlap with gaming ecosystems. I think tokenization is an ideal fit in many of those jurisdictions. You're already seeing it.
Mm. And so obviously you and I have spoken before, and you've always articulated very clearly the role that you think that the Middle East has and will continue to play within this. With everyone else playing catch up, how do you think that that plays out for the Middle East? Like, is their positioning still sustainable? How does it influence the rest of the other global markets?
Well, what a great question. I think that for a number of reasons, the leadership role that they will play is somewhat consolidated, meaning because of the other transformation initiatives that are going on in arguably each of the GCC countries to larger or lesser extents, they're all going through major transformation initiatives that all amplify and rely on blockchain, digital asset, tokenization principles. And so I think they will become by default a laboratory for success and to an extent failure. But they still will be much more associated with the tip of the spear or the bleeding edge of innovation because of the mandates that the governments have to change on several different fronts. So if you look at the Saudis, for example, they have a mandate not necessarily for crypto. In fact, crypto isn't even approved yet in Saudi for broad exchange and trade, even though if put to the test, most Saudis would admit to being very interested and maybe engaged in crypto. The reality is that there haven't been both the religious authorization with a formal fatwa. Sama hasn't sorted it out. But if you look at the framework for Vision 2030, if you look at the Saudi fintech strategy, it's a playbook for these things. It's an absolute playbook. If you look at the amount of tokenization enterprises coming through ADGM alone in Abu Dhabi, it's staggering. So will the US have a dominant role to play? Of course, of course. But from an innovation perspective, I do expect incredible things from that part of the world. I really do. You know, the other place we haven't really talked about, a culture that's crypto crazy and very interested, but the regs have been even more stern, is in the subcontinent. So when we think about India and India's role as an economic entity and its potential role as a powerhouse, I think they're the big wild card. But we still have, despite all of the developer talent, despite all of the folks that are involved in the industry with roots to the subcontinent, you know, we haven't seen them really emerge. And it'll be interesting if messaging in Davos next week from the Indian representation changes a little bit, but they've had a very stern, restrictive, conservative view of crypto, I would argue even more so than the United States. And imagine if that economy is unleashed. So that's a big wild card.
Yeah. Okay. So one to watch. Um, well, listen, I mean, this has been a really interesting conversation for people listening. Do you want to share a little bit more around how some of your various consulting enterprises support the industry and some of the working groups that you're a part of?
Yeah, I'd be happy to. Thank you for that. I don't want to bore anybody, but look, at Rubicon Digital Assets, we've been doing some very high level advisory and consulting, not surprisingly, in the Middle East for discrete families and institutions. In many cases, looking to oversee some of the work initiated by larger consultancies, but in some cases, very specific things. Think about, I was talking before about companies that were established that didn't have to look at this new world that you've been immersed in for many years now. Imagine you're an old trading company, a merchant family in Abu Dhabi. You have a very successful 3, 4 generation business and global ties. You're faced with now having to come to terms with, well, do we want to think about different mediums of exchange for our trading partners in Japan? Do stable coins make more sense for us to be doing it? So it's work like that that's been quite fascinating. I serve as a non-resident and a contributor to the Atlantic Council's Geotech and Middle Eastern centers. And what I love about the Middle East Center is they have a terrific program for female entrepreneurs in the Middle East called the WIN Fellowship. And so at present, I'm actually mentoring several female founders in Jordan, in Saudi, in the UAE, and that's a terrific organization. And selfishly, it provides me with some incredible insights as to what's going on at the ground level in those communities, which is terrific. I'm very proud to be a member of the Bretton Woods Committee, and I'm about to join the advisory board beginning later this month in Washington, D.C. And the Bretton Woods Committee is one of those membership organizations that is comprised of people that range from prudential bankers at the central banking level to executives in financial services and banking, policy, legal, and such. And I've been fortunate to lead some of the important work in bringing digital assets to that community. If I'm being honest with just you, don't tell anybody. When I joined, it was because I'm a history geek and I was fascinated with the group. But I thought when we were in the pre-regulatory stage with Rubicon here in the United States, where would I find a focus group of very accomplished ladies and gentlemen that are probably not going to be open-minded to what I was trying to do with Rubicon, you know? And what I found was actually if you get these very accomplished people to alone, they know more than the people that you meet at parties. They actually understand how big of a deal some of these things are. Look, I'm on the advisory board of the Digital Dollar Project, which is a terrific organization here in the United States that is trying to advance education of policymakers and to business leaders about digital dollar, CBDC, these kinds of concepts, because whether we like it or not, these things are taking place in other jurisdictions, and we at least need to be more aware of them. So And aside from that, I do quite a bit of work here in the United States on the consulting side at the non-executive director level and so forth. So blah 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 blah. but but that gives you an idea. And so my challenge to everybody is we're at a moment in time where in the last 500 years, you could say without any hyperbole, that there's never been a moment where the order of things is being challenged as aggressively as it is right now. And what I would also say is there's never been a moment where the average citizen that is educated, that is aggressively curious, that wants to lean into these conversations can have a seat at the table, figuratively and literally. And these are the types of people, going back to your staffing question, that need to comprise the boards, the advisory boards, and indeed the executive leadership teams of the future. It is no longer going to work the old way. So
Mm. I think that's a really powerful statement and something to kind of tie it together. As part of what you said, for me, it comes down to also that that represents true diversity of thought, which is the thing that I believe is really crucial if we are going to have a new world order. It cannot be the same thinking, and the same thinking is created by basically the same people at the table. So the thing that really
exactly.
excites me is the fact that it looks entirely different now. Somebody who's you know 25 years of age has got something, potentially got something incredible to add to the table in the same way as like somebody from every part of the world. So the sort of cultural age and every other sort of demographic, the way that it's this incredible melting pot,
Right.
is the thing that I am like most excited about in terms of creating something actually
You,
different.
you bring up two things that I just have to comment on. Number one of the things over the last 5 years of being involved heavily, not heavily, exclusively into digital assets and crypto, um, I really take offense to the comment that we've been hearing every time there's a crypto winter. You'll hear the refrain often, at least here in the United States, we need more adults in the room. And I get so offended by that because I'm like, yeah, you mean the same adults that almost drove the global economy off a cliff 15 years ago? No, thank you. I think what we need is professional maturity. Professional maturity is not measured by how old somebody is. It's whether or not they bring a certain level of gravitas and thoughtfulness to emerging technologies or disruptive technologies that we have not admittedly seen in crypto. We have not. And so I would say that. And secondly, um, I hope we get it right in crypto, because what you just said about new people having a seat, if we don't get it right, ironically, the centralized existing institutions will capture a much larger share of this new innovation, this new revolution, than they should have. Crypto people often were under the delusion that they were going to show up and disrupt the oldest profession in the world, banking and finance. And I know some people think it's another profession. No, it's banking and finance. Okay. And they honestly acted like, hey, we're here to disrupt you. Aren't you happy? And let's let's do something called Web3, and let's have it be exploited on a bridge like 5 times a week and be
Yep,
taken
yep.
seriously. And the point is that if you're in a digital asset company of regardless of size, you have to compete. The incumbent is not going to give up. No, so, but I go back to what I said. There has literally never been a moment where more disruption is taking place to the way we exchange value, combined with tech disruption. And it presents an incredible opportunity to if you're a curious person, it's like hyperdrive. And if you're in these industries, it's incumbent upon you to raise your game and your level of education.
Yeah. Well, I love it, and I thank you. I mean, you're such a you have an incredible and very evolved perspective on the industry. I've definitely found it valuable. I appreciate your generosity of time, as I'm sure do our listeners. So thank you for joining. I will ensure that we drop your the links to your social channels. So if people want to kind of connect or follow your work, that is easily accessible. But really, really enjoyed the conversation.
Likewise, Ginnette, and congratulations on year 2 of the series. That's a great
Yes.
milestone for you. Congratulations.
Yes, thank you so much. And to our listeners, thank you. And we will catch you on the next episode of Blockchain Disruptors.